All right, guys, welcome back. It is Wednesday, December the 9th, and really had an interesting day today where the market sold off continuously almost all day. SPX down 0.8%, NASDAQ down 2%, Dow Jones down 0.3%. So we're seeing a lot of selling coming in all day, right up until about 2 o'clock Eastern Standard Time. We're seeing steady, consistent selling in all three indexes. And, what really stands out to me is notice who is actually selling off the most and who is not selling off as much. It's the NDX, NASDAQ 100, has sold off 2% today, while the Dow Jones has only sold off 0.3% today. So let me ask you, in the midst of this selling, which stock or who is stronger? It's obviously the Dow Jones. Now, Dow Jones is a little different. It's only 30 stocks and the NASDAQ is 100. But, it's fascinating. The point that I want to make here is that it's fascinating that the market leaders, tech essentially, are actually down today. And you can see this in the industry performance as well here. This is XLK. This is tech. Tech is down 1.92%. Okay, so I'm not saying that the stock market in general is going to crash or that, we're going to start the next leg down, although that it might seem like that depending on how strong your portfolio was today or how weak it was. But when you look at the stocks that and the sectors that used to be strong that are now starting to slow down and weaken, that is not a red flag to say that, oh my God, there's a bear market coming, but it really is just something to take as an additional data point to say, okay, I would definitely pay attention to this. It's not a red flag, but it is definitely, just take note. Okay, take note, and make sure you remember that the market leader has been slowing down. So let's look at the FinViz heat map. I like to look at this heat map, and notice that although today saw quite a bit of selling, led again by tech. We're seeing it. It's obvious, right? We saw it on the previous page. Tech. The XLK sector down 1.92%. We saw the NASDAQ down 2.15%. The NASDAQ 100 down 2.15%. And we're seeing a lot of these other stocks. Look, home improvement, consumer cyclical is doing okay. Industrials, green for the most part, right? Okay, green for the most part. Keep in mind, industrials have been doing okay all year long, and they seem to really be starting to hit their stride now. So that's something that you want to pay attention to as, the previous, not really a laggard, right? Industrials were never really lagging as hard as, let's say, energy. Energy's recently just gone on a tear. But, industrials was never a real laggard, but it was just, doing middle of the road performance-wise. And it's really starting to pick up, and, you're seeing stocks trying to move out and break out. And of course, UPS and FedEx have been doing well all year. Due to just, quote unquote, COVID, economy. But, basically what I want to do the point I want to drive home by showing you showing you guys this heat map is that when you look at this selling, you want to keep in mind the fact that you're seeing selling happening in only a certain, sector of the market, which is tech. You're seeing that the market is actually doing okay in all of these other areas. So you don't really want to, get scared. I wouldn't really get scared right now. You want to look at it. You want to assess the situation, and you want to figure out where the market will move to next. So with that in mind, let's go to the daily chart of the larger broad market. So we're going to look at the ES, which is the futures for the S&P. So when we look at this chart, what do we see? We see that from about September, and this was around, Labor Day, the Labor Day sell-off that occurred, let's analyze the quality of the selling here in this bracket and then analyze the quality of this candle here. And then with that, we can figure out where we might end up going next. Okay, so, So looking at this candle, we see high elevated volume. We see a lower high forming about a month later, but we're also seeing a slightly higher low, and we see that price eventually pushes up in a very strong, aggressive manner. We see the retest at 35.76 level, and we see that it's just drifted up since then. So looking at this candle, I would say it's not really awful. At the same time, I think it's very obvious where it wants to test to, and if you'll notice, it actually stopped right above the high of this candle on November 9th here. The high was put in at 36.68. Today it closed at 36.71. So just 3 points above the high of this candle. So that's very interesting. You know, what we're really looking for here is we're looking for strength. Not on the part of sellers. We're looking for strength on the part of buyers. Why? Let me ask you that question. Why are we looking for strength on the side of buyers and not sellers? Because this is the time when we should be seeing buyers crawling out of the woodwork, okay? This is when we should be seeing buyers showing strength. Why? They've just passed the test. They've just pushed through a resistance level here, right? That, you know, where they rejected very heavily. I mean, look at the volume pattern down here, right? If you look at this volume pattern, it's a very strong rejection by sellers saying, no, it's not time for you to test and go over 35.76. It's time to take a trip back down here to see how low we can get it. And they stop at 32.13. So when you look at the nature of this selling here on September the 3rd, and you look at the nature of the selling, you know, 2 months later on the 17th and the 18th, you know, you can see that this is a retest unfolding across, unfolding before you right here, that you can, you know, with 75% confidence say that on the 19th, that it was indeed a retest. So as we get up to here, the question that you should be asking yourself is, where does it want to go to next, right? If you watched my last video, you should always ask yourself, whether you're long or short, or, you know, whether you're net long or net short, you always need to ask yourself, when you see a move like this, where does it want to go to next? And based upon this candle forming right now, I will tell you, I think it wants to go down, right? I would be lying if I told you that, you know, based on the formation of this candle, it wants to go back up, right? There's obvious reasons for why it looks like it wants to go down. You know, you got to understand the chart is telling you something, so you got to listen to the chart and, you know, listen closely. So when you look at this candle, what are the factors that tell me that it's going down? First of all, notice the volume pattern. 1.7 million on the volume, okay? On the day before, 1.8. So we're seeing, you know, a 70% increase in the volume. Oh, you know, that's huge. A huge amount of volume has come into the market basically and sold it off. You know, we're seeing there's somewhat of a buying tail here, but it's not very big. You know, so I wouldn't really give this one too much weight. So, you know, when you look at this kind of, it's also, you know, quote unquote, a engulfing bearish candle, right? So it opens up higher, it closes lower, and it engulfs the body of the candle before it. Can't quite get down to the lows, but, you know, it's penetrating well into the tail of the candle of the day before. So looking at the price action here, you have this you know, good spread candle, combine it with the volume down below 1.7 million. To me, this is yelling and shouting that it wants to go down. Okay. So what are some possible scenarios that might end up playing out here? Well, if you were short the market here, if you got short here, where would you be looking to? First of all, you'd probably be looking to around this level. Well, the real test will come tomorrow to see if sellers can close below the high of this candle. This is pretty significant, right? Sellers came in to defend it again. There's going to be some testing to see if the sellers can defend it, you know, 2 times now, right? They came in, they busted it all the way down. We eventually climbed back over it, and we really want to see this level be defended to see if the sellers will retake it, or if the buyers will then flip this into a support level and take it up. So, you know, they did travel below it, but it got pushed back up. So there should be another retest tomorrow to see how much lower it can get, to see if it can close below the high of this candle. So looking at this, we need to ask ourselves, well, where does it want to go? And, you know, the high here is one level, possibly here as well as the next level, and then this will be the ultimate level, 35.77, or this zone. You know, you don't really want to say a level per se, but, you know, more of a zone. If it closes below this level, you know, 2-3 days, you would expect to see a test of the break of the sell-off and then back down to 32.13 here on the bottom. So, you know, you really want to look at this and ask yourself, where does it want to go? We know where it wants to go. We need to see if it'll actually get down there. You know, what could end up happening is there's two main ways, like two large ways that this thing breaks out, right? In either up or down. The first way is that's in the more bullish way, which I know I have a bullish slant right now because I'm not, you know, I need to see more selling and more supply entering the market. But I think, you know, short term, we might be due for a pullback and a correction based on this candle. But what you might end up seeing is that the candle sells off here and we see a little bit more selling. We essentially see a half-hearted retest by sellers. The buyers come back in and take it up higher. Or if we see sellers showing real strength here, we could see a close below 35.76, a test by buyers to see if they can get back above 35.76, or let's call it 35.80, to see if they can get back above 35.80, and then continued selling to the downside. It's one of these scenarios that I can't really, you know, no one will really say for sure what the next moves are and exactly predict with high probability, but that's one scenario. You know, sellers show moderate strength, but then it goes back up, or sellers show great strength and force it down to 35.76. A retest happens, or, you know, maybe they're so strong there is no retest and prices travel, right back down to 32.13. So that is that's the bearish scenario. Okay, bearish scenario A, weak selling, goes back up, and then the truly bearish one in the longer term is that comes down to 35.76, penetrates, retests by buyers, fails all the way back down. So that's, you know, scenario A and B, and then of course there's many variations in between where sellers, you know, get it down a little bit, picks back up, get it down even more, picks back up, they close below 35.76 in a really scary looking shakeout before they take it higher. So those are some of the scenarios that could occur. Of course, you know, I think that would be appropriate actually. When I look at the action here, I would say that would be totally 100% appropriate and desired, that we do see a little bit more selling here before the market continues to run up. Okay, so, you know, I'm totally on board with that. And one of the things you got to keep in mind is you have to have good trade location for that, right? You know, there will be a time, I believe, there will be a reckoning, right? There will be a reckoning for when we need to essentially the market will reflect the economy at some point, where, you know, the market will see a correction, a substantial one. But until it gives me the sign, you know, I'm not gonna short the market, and I'm not gonna go to cash, right? There will be a time for that, and until we see more selling, until I see more selling and more supply and more you know, conditions like that as they deteriorate, then I'll make that decision, right? It's not something you want to look for every day, right? It's something that you just want to be aware of. You know, make a note of it as you notice certain things like tech, right? Like if you look at tech, you know, tech, which was, you know, previously leading the market, it's slowing down now. It actually sold off 2% today. You know, so you want to keep that in mind. These are all pieces of data that should be informing your overall broader market perspective. So as we go back and we look at this, you know, there will be a time to get short the market, but currently, assuming you didn't buy in today at the high, you know, thinking that this was strength, you want to kind of just be standing aside and paying very close attention to see how strong the selling is. And when you look at how strong the selling is, if you're in a position right now, you got to remember, you need to have optimal trade location. You need to have good trade location. You need to be able to get into and take and build a position in a stock and not be scared out of your position when you see some selling entering the market. It's normal. You know, stocks do not go up in a straight line. Stocks sell off. Stocks see, you know, retracements and corrections. They don't always just go up in a straight line. So it's okay, it's normal, and it's expected that it would sell off occasionally. And it's really up to you to have good trade location and good trade management to make sure you don't get scared out of a position. So when you look at something like Disney, which I do have a position in, you want to say, where would you have wanted to get in? You wanted to get in here. Okay, I actually got in a little bit early. I got in here around October, prices went up. This was on news about their reorganization to go to focus on Disney Plus and more streaming. And so this is a pop, a premature pop, and notice here, I want you guys to pay attention to the volume signature here, 22 million, the day before 10 million. So volume doubles and price actually closes down. You do not want to see that. That means price is going most likely to continue down in the opposite direction, right? So, but I had a good trade location. I was buying around the lows off $121. So the fact that it goes up here, then it sells off the next few days, doesn't really bother me. Even when I see this candle form, I'm not bothered. I actually decide to buy in more here, and I'm rewarded for it. So this is, what good trade location opens up for you, right? So I've held on, and this is really just kind of trade management in general, right? So I buy in here, the market goes up and shows, it's a slight display of strength going up to the mid-range, off some, good news. And then it sells off and it actually closes a day below. Now, I think a lot of people would ask, why did I buy in on this candle seeing the volume pattern was 11.6 million, the day before was 6 million, it doubled? Well, it's kind of hard to answer that question, and this video is already getting up to be close over 15 minutes. But I'll basically just say it looks like this is the end of the line for sellers, okay? Go to the chart, look at October 28th, and you can do the research and tell me why it looks like it's the end of the line for the sellers, right? And keep in mind, you don't see that rally unfolding, right? All you see is this. So you just see this red candle form, and I decided to buy in down there. So, look at the chart, and it's telling you that it's actually done. It's the end of the line, okay? So, but anyway, that's the reason why you want to have good trade location, because with good trade location, you can then, it's a day of selling, and I was watching this level very closely at 153, right? Why is 153 a key level? Well, because this is where price came to back last December, right? So as you can see, the price has gone up, from the COVID lows, and now we're looking at, possibly testing above and seeing if we can defeat this level here at 153. So this is a level that's being watched by a lot of people. And, so I'm watching this closely, but because I have a good trade location here, I'm able to keep on holding. And, that's exactly the kind of scenario that you want to be in today, okay? In a market action, in a price action like today's, when, there's a lot of fear and talk in the news about a COVID second wave, next leg down, stimulus bills aren't passing, all that stuff. You want to be, like I said, I don't do anything with the news. I don't trade the news. It's up to you to be in good trade, locations. It's up to you to be in a position where you don't really care too much. We're all watching closely, right? Like we're watching closely. We're seeing this red, ugly candle form. But because of good trade location, we are still up on the year, and we do not need to worry about getting blown out by this candle. So that really wraps it up for today. I kind of gave a few scenarios about where I think the market will go, pointed out some interesting things about how, tech, which has been leading the rally off the COVID lows, is starting to slow down and actually sold off the worst today. Fascinating. We're seeing the Dow Jones, looking. Dow Jones is not looking too, he's not looking like he's worried about anything. He's just kind of like in a little bracket, just kind of stuck sideways without going down very far. Lots of volume on this candle, but not a whole lot of downside progress. Still can't get below the open of this candle, so it's looking. He's looking a lot tougher than the NQ and the NDX. He's looking a lot stronger, and the S&P, well, it's always going to be somewhere in between. So, like I said, I believe that the path of least resistance is still up. I don't anticipate, a broader market sell-off. I don't even know if one will occur. My gut tells me that at some point we'll have some kind of a reckoning with the, the economy has been damaged slightly by the coronavirus. So I'm thinking that there's going to need to be some kind of reckoning. I just don't know when, and it may not ever even happen. I mean, we've seen cases like that before in the past where, the U.S. declares war on Iraq and the market just doesn't really care and continues to run up and enter a bull market. So it's not the first time it's happened. It could totally get papered over, and we survived the worst of it, already back in March. So if we survive the worst of it, then, what's really up here that's going to come ahead? I don't know. Maybe nothing. So anyway, that's it.